Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. Also, hit that post notification bell for me so that you're notified every time I upload a new video. If you want 6 free stocks, Webull is going to give you 6 free stocks when you open up a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you 6 free stocks valued all the way up to $12,600. So at the end of this video, I want you guys to go down to the description box of the video. Click on that Webull link, open up your new account today, go get that free stock, go get that free money. Well guys, in today's video, we're going to talk about the collapse of the dollar, specifically the collapse of our dollar, and what we can do to stop it from collapsing. This big old thing called inflation is eating away at our dollar, guys. And inflation happens when there's a sharp increase in the price of the goods and services that we use on a daily basis. And what causes that sharp increase in price? A lot of demand with little supply, right? So when the pandemic broke out in March 2020, everything shut down, right? So the companies that make these goods and services, they shut down. The companies that sell the goods and services to us shut down. And when everything opened back up, we had quite a bit of money. Why? Because of stimulus checks. So we then took those stimulus checks, at least some of us, and started buying stuff. The problem was there wasn't enough of that stuff to buy. We had a supply issue. We had a supply chain issue, which caused a supply issue. There was not enough of goods and services to go around. So that increases prices, right? And that's what happened. And that's what causes inflation. Right now, inflation is about 8.5%. So the dollar that I had last year to buy goods and services is not worth as much this year because of that 8.5% inflation. So what should we be doing with our dollars right now in order to protect it against inflation? Now, I know some folks will say, you know something, in times like these, man, I'm going to keep my money in the bank. It's protected. I ain't got to worry about anything. And I know it's there tomorrow when I go take a look at it. I ain't got to worry about it not being there. The problem with that is if you do that over a long period of time and inflation is at 8.5%, guess what? Every single year, your purchasing power on that money that you're keeping in the bank, you lose 8.5% purchasing power, right? So at some point, the money that you have in the bank, if you leave it in there long enough and inflation stays at 8.5%, I don't care if inflation comes down to 5%, 2%, it doesn't matter. Inflation will always be higher than what the bank is willing to pay you from an interest rate standpoint to keep that money there. So over time, inflation eats away at the money that you keep in your bank account. Now, one thing you can think about doing, at least what I do, is I find investments that I can put my money in that will outpace inflation. Now, right now, it's really hard to find investments to outpace inflation when inflation is at 8.5%. We know right now what's going on in the stock market. It's not doing that well in 2022. And the reason it's not doing that well is because when the Federal Reserve, right, is trying to bring down inflation, what do? They increase interest rates. See, when interest rates increase, short-term interest rates increase. Typically what that does to the stock market is it decreases the stock market. Why? Because investors are starting to pull their money out of the stock market and put their money somewhere that they believe is safe. See, the stock market is made up of companies, like I've always said to you guys. It's made up of companies. And most of these companies need to borrow money in order to grow. They borrow money in order to do R&D. They borrow money to hire people to expand. But the only way they can borrow that money is if it's cheap enough so that they can take the cheap money, put it out into production, and then make a higher return on that cheap money by way of revenue and profits. Now, if they can't do that, then they're not going to borrow the money, but then they don't grow. And if companies are not growing, then investors don't want to invest in those companies. See, investors like myself, you, institutional investors, we don't want to invest in companies that are not going to be growing. So that's why right now the stock market is doing what it's doing, is because companies are not growing. They can't borrow money cheaply to grow, so they're not borrowing at all, but they're also not growing, right? So what happens is big institutional investors, they pull their money out of the stock market and they put it somewhere where they can get a better return than what they're going to get in the stock market right now. So the stock market right now is probably, to some folks, not an attractive place to put money. But for somebody like me that's been doing it for over 20 years, I understand the cycles in the stock market, right? Right now we're in a down cycle. But it's an opportunity for us to be able to be buying these really great companies, these really great ETFs while they're on sale. Even though in the short term, it looks like inflation is kicking our butt and we're losing money, or our money is not making any money. In the short term, it looks that way. But here's what you got to think about. At some point, inflation is going to come down. And where we would really like inflation to be is between 2 and 2.5%, not 8.5%. But when it does come back down, and it will, because it always does, then that's when money will become cheap again. Companies will start borrowing again. Companies will start growing again. And guess what? More investors will start coming back to the stock market, investing in those companies. And when people invest in companies, right, what happens? Those companies typically, their stock price typically goes up. And that's where we come in as investors. We take advantage of that. We buy them today while inflation is high at 8.5%. It's high. And people are not investing in companies. We invest in them, right? Let's invest in these companies while their stock price is low, right? Let's invest in these ETFs while their stock price is low. And then what happens is, when inflation comes down and these companies start rallying again and borrowing money and growing again, then guess what happens to our investment that we bought low? It goes up high, and that's where we make our net worth. And that's how we beat inflation, guys. See, someone that puts that money in that savings account and leaves it in there for 5 years, guess what, guys? They're going to lose. They're going to lose purchasing power. Because that money that they're keeping in that savings account will not outpace inflation. It won't. Because there is no bank out there that's going to give them a 2.5% interest rate, 3% interest rate on their money all the time. Banks can't be in business. They're not in business to do that. They're in business to get your money as cheap as they can get it and then turn around and use your money to make money. That's how they stay in business. They're not in business to give you some high interest rate on your money and then they can't turn around and make any money off of your money. That's not how it works. It works is, let's give these people as little interest as we can, and then we take their money and we go lend it out to somebody at a higher interest rate and we make the spread. That's how banks operate. But if we do the other way, where we say, you know something, we're going to take this money, I'm going to put it in the market. Even though I know the stock market right now is not doing very well, I know that's temporary. As soon as inflation comes down, the market is going to take off again. Or we say, hey, let's take this money and perhaps put it in a piece of income producing real estate. Yeah, I know real estate prices are a little bit high right now, but you know something? If I can get enough rent out of this property, then it may be worthwhile. Because really what I'm trying to do is outpace inflation. So if I can buy me a piece of real estate and get me a 8.5%, 9%, 10% cash on cash return, guess what I'm doing? I'm outpacing inflation. My money is actually growing, even though inflation is at 8.5%. We also know inflation won't stay at 8.5%. At some point, it's coming down. Why? Because the Federal Reserve is going to keep raising them short-term interest rates until it forces it to come down, right? And I made another video about my thoughts on that. So that's your two options, guys. When the dollar, our dollar is collapsing, our two options are this. We can put the money in our savings account and watch it continue to collapse because inflation is going to continue to eat away at it and our purchasing power is going to be less. Or we can take our money and temporarily see a collapse, perhaps, because we're going to be putting it in the stock market in some cases, if you're comfortable with that. But we know long term, 18 months, 24 months, 36 months will more than make up for that short-term collapse in our dollar by putting it in the stock market. Because why? We're buying low, but ultimately we know once the market turns itself around. And how do we know that? Because we know companies will start growing again when money is cheaper and they can borrow it cheaper and they can take that cheap money, deploy it and make money off that cheap money. That's how companies work in most cases. Yeah, you got your giant behemoths out there who are extremely profitable. Even in good and bad times, they're going to be profitable. But the majority of your companies, guys, this is how they operate. They borrow money cheaply. They take that money. They create products and services. They create expansion. They hire people, but they do it with cheap money. And then they turn that cheap money in, or they use that cheap money to make money. So drop me some comments, guys, down in the comment box and let me know what you think about the collapsing of our dollar due to inflation, right? Inflation is a serious thing, guys, and we got to pay attention to it, right? Especially if we want to be good stewards of our money and we want to build wealth. We got to pay attention to inflation and what it's doing, and we got to know how to beat it. And the way you beat inflation right now is investing in assets that build wealth. If you want those 6 free stocks from Webull, guys, click on that link down in the description box of the video. Open up that new Webull account today and start using it to buy your companies while they're on sale, man. Buy your favorite companies while they're on sale. Buy your favorite ETFs while they're on sale. Buy your favorite cryptos. And then just have a long hold pattern, man. Just have a mentality of, I'm going to be buying these things at a discount, but I'm going to hold them. Once inflation comes down, market's going to skyrocket, guys. That's what I believe. That's what it has done in the past. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash that like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.